Welcome to Nerdbull1669 Weekly Trading Outlook tips for this week, 16th to 20th of March 2026. Before we go into this week, right, the trading week of the last week, March 9 to 13, 2026, right, was actually defined by extreme volatility as the Wall Street trying to balance a geopolitical energy crisis against the relentless momentum of artificial intelligence. So for the market summary of March 9 to 13 of 2026, the major indices ended the week in the red, with the S&P 500 and Nasdaq Composite losing nearly 2% overall. The primary driver was the escalation of the Iraq war, which caused the crude oil to whipsaw and directly pressure the high growth tech valuation. So on the 10th, the first so-called narrative was the energy shock. So oil prices dominated headlines as shipping through the Strait of Hormuz, a choke point for the 20% of the global supply, came to a near standstill. So Brent crude actually surged as high as $120 per barrel early in the week before settling near $100 following news of a record 400 million barrel reserve released by the IEA members. Okay, so on the sector performance, energy was a rare bright spot as stocks like ExxonMobil and Chevron gained on the crude premium. So conversely, right, consumer discretionary and transportation sectors suffer under the weight of a 25% spike in diesel prices since the conflict began. So the Nvidia week. So Nvidia actually showed resilience, but ultimately fell roughly 1.5% to close at 180.25 on Friday, 13th of March. So while analysts at Morgan Stanley issue an upgrade, the gains was actually capped by fear that rising energy costs would inflate the operational expenses of the massive AI data centers currently being built. So coming to the market outlook of 16th to 20th of March 2026. So investors are bracing for a pivoted week where the two pillars of the current market oil and Nvidia will likely determine the next major trend. First, we look at the Nvidia GTC catalyst, which is happening on Monday to Thursday, 16 to 19. So the GTC 2026 conference is the most significant event for tech investor. All eyes are on the CEO Jensen Huang keynote for detail on the Vera Rubin platform and the Blackwell Ultra ramp up. So on the key signal, do watch for updates right on the sovereign AI initiatives. If Nvidia show that the demand from national governments is offsetting the potential corporate belt tightening due to oil prices, it could trigger a significant rally. On the price target, right, some analysts, including the Bank of America, remain hyper bullish with price target near 300, quitting Nvidia valuation at 17 times forward earning, the low end of its historical range. Okay. So on the next narrative, right, the oil and inflation equilibrium. So the war premium remain high. If Brent crude hold above 100, right, the focus will shift from supply shock to long-term inflation. The Federal Reserve factor, with the Fed expected to keep rates on hold next week, right? Any sign that the oil is staying higher for longer could dash hope for a rate cut later in 2026. So political wild card. So on the political wild card, so market are actually tracking reports of a potential US Navy escorts for tankers. Any de-escalation headlines could lead to a massive relief rally in equity and a sharp drop in the WTI prices. So appreciate if you could share your thoughts in the comment section for this video, and then do help to like and share this video. We greatly appreciate your help. For disclaimer, do note that the analysis and the result presented does not recommend or suggest any investing in the said stock. This is purely for analysis purpose. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support, and we look forward to you supporting the channel for more content. Now coming to the macro snapshot for this week. Heading into the week of 16 to 20th March 2026, the macro landscape is actually shifted uh, into a high stress war and chips regime. So the confluence of a military conflict in Iran and a massive AI catalyst has created a unique bifurcated market where energy prices and technology innovation are fighting for control of the narrative. So on the risk appetite, it's actually a risk off with an AI exception. So the general market sentiment has soured into a defensive risk off posture. So the Iran discount narrative, so investors are actually aggressively hedging against a systematic shock. So the war premium is now fully priced into equities, with the S&P 500 down roughly 2% last week and over 1.5% year to date. So capital the exception, the capital is not freezing the market entirely. It's actually rotating. While small cap and transport stocks are being dumped, money is actually flowing into energy, namely SLE, and defense as safe havens, and into the AI leaders like Nvidia as an antidote to the slowing global growth. So on the rate direction, so we are looking at a higher for longer redex. So the outlook for interest rates has taken a hawkish turn. Before the Iran conflict, the market expected 25 basis point cuts in 2026. Those expectations has now evaporated. So Fed is on hold narrative. So consensus for the March 18 Fed meeting is now a firm hold at the 3.5% to 3.75% level. So on the inflation spike, so with the every $10 per barrel increase in oil potentially adding 0.2% to the US inflation, the Fed cannot justify a cut while the crude sits above the $100. So the swap market, so markets are actually pricing in barely one rate cut for the entirety of the 2026, with some analysts warning that if oil were to hit $140, the Fed might even have to discuss a preventative hikes. So on the volatility regime, so we are looking at high stress regime shift. So we have officially entered a high volatility regime. So the VIX surge, so we can see that the VIX, the VIX on the fear gauge, actually spiked to 25.07 on March 11. So its highest sustained level since the 2022 Russian-Ukraine shock. So a VIX above 25 signals a shift from buying the dip to defensive preservation. So on the oil volatility, so energy benchmarks has actually decoupled from the broader market. So the Brent crude actually hit a intraday highs of $119.50 last week. So the market is actually now extremely sensitive to any news that is regarding the Strait of Hormuz, where a prolonged blockages is no longer a theory but a present reality. So As we head into this week, 16th to 20th of March 2026, right, the market is actually at a technical crossroads. So the tightening opening year range since the 1928, right, for the S&P 500 is now under immense pressure from the geopolitical volatility and the surge in the oil prices. So here are the technical breakdown for the week ahead. So S&P 500 on the SPX as well as the Nasdaq on the IXIC and NXD weekly outlook. So the S&P 500 has just spent most of 2026 oscillating between the 6,800 level and the 7,000 level. The hammer recovery late last week suggests deep buyers are active, but the trend is actually leaning towards a rolling correction rather than a vertical breakout. So on the S&P 500, for the trend continuation, we're actually looking at above 6,932. The S&P 500 will need a daily close above the 50 days moving average DMA to re-engage the bull trend towards the 7,200 level. So on the pullback risk, right? So below 6,790, a decisive breakdown here will actually target the 200-day DMA near the 6,650 level. So coming to the weekly outlook for Nasdaq, right? So Nasdaq is actually returning above the supply zone, right, at 25,300. This actually signal that the AI trade has actually digested the Iran war news. So the 24,557 is the 200-day DMA. So the failure to hold this structural level would actually project a deeper slide towards the 3,800 level. So now coming to the individual stock analysis for this week, which we will be doing the bullish bias as well as the invalidation. So this week actually features heavy earnings and the conference catalysts like the Nvidia GTC on Monday, Tuesday, as well as the Fed earnings on FedEx earning on Thursday. Okay, so first let's go to the first stock for this week. Okay, so Nvidia, we're looking at Nvidia NVDA. So NVDA, okay, we're looking at Nvidia reclaiming the level at $187.50 post a GTC keynote. This would suggest that the Vera Rubin chip news, right, is successfully offsetting the macro energy fears. So for the bullish buyers, we're actually looking at above the $187.50. So for the invalidation, right, we're actually looking at anything that's below $177. So the $177, right? So this is a critical floor from late February. So a breach here at the $177, right, would actually invalidate the near-term bullish thesis and risk like a sell the news event eventually down to $165. Okay, now coming to the second stock of this week, looking at Micron Technology, ticker MU. So MU is actually currently in a ascending wedge. So a break above the $350, right, will confirm a higher and will set a path towards the analyst target of $400 as the HBM3E demand remain sold out for 2026. So for the bullish buyers, we're actually looking at above $350. So for the invalidation, right, we're actually looking at below $300. So this psychological and technical support cluster must hold. A drop below, right, 300, right, will shift the buyers, right, to a bearish profit taking for MU. Now coming to the third stock for this week, FedEx, which is having the earning release on Thursday. So for FedEx, right? So FedEx trading above its 50 days DMA ahead of the Thursday earnings suggests that the market is actually pricing in a network 2.0 efficiency bid despite the high diesel cost. So for the bullish buyers, right, we're actually looking at above $344 level. So for the invalidation, right, we're actually looking at below $332 level. So a failure to hold the $320 to $322 level zone post earnings, right, will signal that the rising oil, right, is actually eating into the margins faster than the cost cutting measures that they can keep up. So now coming to the last stock analysis for this week. So we're looking at DocuSign, DOCU. So this stock is having the earning release after the market on Tuesday tomorrow. So for the DocuSign, right, you actually need to clear the 50 days moving average to break the current 3 days downtrend and validate the AI agreement management turnaround story. So for this, for the bullish buyers, right, we're actually looking at above the $49.50 level. So for the invalidation, right, we're looking at below the $44.20 level. So this is the local low. Failing below the $44.20, right, this would suggest that the market has actually lost faith in the IAM, Intelligence Agreement Management adoption rate. So now coming to the critical support levels to watch for this week. So for the first asset, right, we're looking at S&P 500. The key level that we need to watch this week, right, is $6,600 level. So the significant for this, right, is that this is a psychological floor, right. A breach below the 6,600 level, right, could invite technical selling. Okay. So the next one, the next asset will be Nvidia, NVDA. So the key level that we are watching is $177. So this is the recent support level. So staying above $177, right? This should keep the post earning trend intact. Next, we come to the crude, the oil. So key level $120. So if oil were to break back above this level, $120, so we will expect a broad market risk off move. So this is something that we will need to pay attention to for this week if you're trading the market. So wish everyone having a great time trading the market, and good luck. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. To practice discipline and patience with. So this video is actually for educational content only, and it's not financial advice. So the disclaimer, so the analysis and the result, right, as you presented, does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.